Greetings again, traders. I want to quickly explain to you the ICT power of three, which is simply the accumulation, the manipulation, and the distribution. Now, I told you that there are three trading sessions or major trading sessions in Forex. We have the Asian session, we have the London session, and we have the New York session. The Asian session starts from 7 p.m. to midnight New York time. The London session starts from 2 a.m. to 5 a.m. New York time, and the New York session, the AM session, starts from 7:30 or 8:30 to 11 a.m. New York time. We also have the PM session for New York, but we are not going to pay attention to that in this video. So the power of three simply states that for price to actually be delivered, there has to be some form of accumulation, there has to be some form of run on stops, buy side or sell side, before distribution. Okay, and usually we believe that the accumulation phase occurs during Asian session because the Asian session is actually very slow. And how to approach this is when you step into your chart, we don't advise that you should trade the Asian session. We advise in smart money that you should wait for the Asian session to close. It's not like you cannot find opportunities during Asian session, but usually it is very slow and choppy. Okay, so what you want to do is when you step in the market after the Asian session, you mark the time. Okay, when it starts, the Asian session will start at 7 p.m. New York time. You have to put a vertical line like this. I am going to show you in the chart, and then it's going to close at midnight, okay, New York time. So this first vertical candle is going to anchor to what? To 7 p.m. New York time, and the second vertical line is going to anchor to midnight open New York time. What you want to do is you want to look at the range. Okay, look at what simply happens here during Asian session. You are going to pay attention to the high of Asia and the low of Asia. Why? Because there is liquidity above the Asian session and there's also liquidity below the Asian session. I am going to show you that. Okay, so what you want to do is you want to let us assume that this is what happened during the Asian session. This is what happened. Usually it is kind of choppy, very choppy. Okay, it's always very ranging, like it's a ranging market. So what you are going to do is when the Asian session closes, it's going to form an Asian range. This is the range. Okay, the range is from 7 p.m. to midnight. So as a smart money concept trader, what you want to do is you are going to mark the high of Asia and the low of Asia. You can start with the low. Okay, this is the low of Asia. Okay, the highest low that was formed or the lowest low that was formed during the Asian session, and you are also going to mark the highest high that was formed during the Asian session. So this is going to form your range. Okay, this is your range. What you are going to do next is you are going to label it. Okay, this is the Asian low sell side liquidity, and you position it to the bottom. Okay, you can position it to the bottom and you center it like this. Okay, then you are going to label this one also as the Asian high buy side liquidity. The Asian high buy side buy side liquidity, and it's going to be at the top and it's going to be centered like this. Okay, I hope it is clear. Now what you want to do is you are going to pay attention to the last candle that opens or that was traded, okay, during the Asian range or the session, and the first candle that is going to open at midnight. Just pay attention to what I'm going to do here. You are going to extend it across because that is the true daily open. Okay, that's the true daily open. You extend it across up to midday. Okay, 12 p.m. for that trading day. You extend it across and you are going to label it as the New York, okay, midnight open price, which is 12:00. Okay, like this. This is how you do it. Okay, this is 12 a.m. just excuse me, and then you are going to position it to the middle and then to the right. You can position it to the top, no problem, something like this. This high has to be like, okay, I hope it is understood. Just do exactly what I'm doing here. Now this is your gauge. This is the Asian range and this is the Asian session that has closed. Okay, now you have marked the midnight because the market actually opens at midnight. what you want to do is, if you are bullish, which means your bias is bullish, you are anticipating to buy this currency pair, what you want to do is you want to wait for price to trade below the Asian session. Take out liquidity below here. Okay, if the market trades below here and grabs liquidity below the Asian session, you are going to wait for a shift in market structure on a smaller time frame, and you will buy. When you buy, you are going to target this high as your target profit. That's the Asian high buy side liquidity. I hope it is clear. So you are going to wait for something like this. Okay, wait for price to trade below this Asian lows. Take all the liquidity below the Asian low, the sell side liquidity below the Asian lows, and then you are going to wait for a shift in market structure on a smaller time frame, and that is where you are going to execute. This is shift in market structure here. Okay, this is shift in market structure. Now you wait for any fair value gap that is within here, or any institutional reference point. If the market trades back into that institutional reference point, you are going to buy from there, and you are going to target what? The Asian high buy side liquidity as your profit. I hope this is clear. This is just as simple as you see here. So what is your trigger? Your trigger is these lows here. You want to see these lows being taken out, because that is where liquidity resides. I hope it is clear. That is where sell side liquidity resides. It means those sell side liquidity have been taken, and then you will take your trade and you will target the opposing liquidity. I hope this works. Just give me time. Sometimes it misbehaves. Just give me time, please. Unfortunately, it has refused to work. That's quite unfortunate. So in the nutshell, you are going to buy when you see a shift in market structure here on a smaller time frame, and you will target the opposing liquidity. That's just all. That's the ICT power of 3. Okay, I hope it is clear. Now if you are bearish, you are going to do the reverse. If you are bearish, you are going to do the reverse. Okay, what you are seeing, this is actually Asian high buy side liquidity. Give me time. This is Asian high buy side liquidity. Perfect. Okay, now if you are bearish, you are going to look for what? A run on buy side liquidity. Okay, a run on Asian high buy side liquidity. So you wait for the market to trade above the midnight opening price. Okay, wait for the market to trade above the midnight open price, grab all the liquidity above this Asian high. Okay, the buy side liquidity. Okay, let it grab all that liquidity, and then you are going to wait for what? A shift in market structure, a bearish shift in market structure on a lower time frame. Now look for any fair value gap inside this range using your Fibonacci tool. I've taught you this, the optimal trade entry. This can happen on a smaller time frame, even down to the 1 minute. You can see it here. Now wait for a shift in market structure which is going to occur here. Look for any imbalance here, fair value gap, liquidity void, or even other blocks. When the market trades back into that, you are going to take a sell, and what are you going to do? You are going to target this Asian lows sell side liquidity as your profit. That is just all, and you are done for the day. That is the ICT power of 3. Okay, ICT power of 3. I hope this is clear. This is what? Accumulation. This is what? Manipulation. And this is what? Distribution. I hope this is clear. Accumulation during Asia, manipulation during London, and then distribution during New York. This is simple as that. And sometimes you see the market will close here during the PM session to close the daily candle. That is just all. There's another thing. Okay, if you cannot sell above here, you can still sell at the midnight open. Okay, you can still sell here because this is your gauge. And if you cannot buy below here, you can still buy at this open or at the midnight open because this is your gauge. You can buy and you still target this Asian high buy side liquidity. I hope it is understood. Now let us go to the chart and I will show you how this works in real life. Another thing is, if you cannot mark this one correctly, what you want to do is you are going to go to your chart settings, like I taught you already. Go to chart settings. Now come to events right down here, events. Okay, you see canvas trading, then events. You see ideas, session breaks, and then economic events. Toggle on your session breaks. When you toggle on session breaks, it's going to bring this daily dividers. Okay, this is daily dividers. I hope you know about it. This is the trading of yesterday, the previous day, the previous day, the previous day. Okay, this is daily trading, everything that happened in the past days. Let me show you how this works, and you are going to see it. Okay, now this range from here to here, is the 24 hours banking cycle. Okay, this is an entire day, the 24 hours banking cycle. So what you want to do is you want to look for the Asian session for that day. Okay, for that day. Now when does it start? It starts at 7 p.m. New York time, right? Hover with your mouse like this. Take this horizontal line, this vertical line. You hover with your mouse, okay, until you see 1900. This is 1900. 1900 is 7 p.m. Okay, you put your vertical line at 1900. As you can see, Wednesday 4th September 2024, 1900. That is the Asian, that is when the Asian session starts. Okay, now you take a vertical line again. When does it close? It closes at midnight. Midnight is 00. Okay, so you put another vertical line there. That is the range for Asia. As simple as this. Okay, that's the range for Asia. Now what are you going to do? You are going to mark the high of Asia for that day. This is the high that was formed during the Asian session, and this is the low, okay, that was formed during Asian session. As simple as this, traders. This is not complicated, right? See, here you have it. Now this is on the 15-minute time frame. So what you want to do is you want to wait. Where is the market going to take out liquidity? Is it going to take out liquidity above here or below here? Now the next thing you want to do is you want to look at the first candle that traded, okay, at midnight. You want to extend it across, just extend it across till midday for that same day. And what are you going to do? You are going to label it as the New York midnight open, okay, 00. Okay, that is 12 a.m. midnight in New York. Okay, that is your ICT power of 3. That's the opening price. Okay, and you are going to put it to the middle and then right like this. Always label it, don't forget to label it, because that is your gauge for the day. Okay, and then you are going to come here, you are going to label it as the Asian low, sell side liquidity, and put it at the bottom. Okay, bottom and center, sorry, you center it like this. Then this one you are going to label it what? The Asian high, buy side liquidity. This is going to be at the top and then centered. Okay, don't forget to do that. So this is your Asian range here. If you like, you can color it. Okay, you can put a box around it so that it will guide you very well like this. Just put a box around it. You can change the color if you want to. Change the color to let's use gray, yeah, something like this. Okay, so this actually defines our Asian range. Now we are on the 15 minutes. We want to go down to a lower time frame, let's say 3 minutes. Some people will even go as low as 1 minute, okay, to see how the market took out sell side liquidity below Asia. Look at something. Is this not what I showed you in the diagram? Look at something here. See how IPTA took price below the Asian lows and then grabbed all the buy side liquidity, all the sell side liquidity below here. See, you see, just with this small run on stops here, that is already what? A run on sell side liquidity. And then look at what happened. They distributed higher, targeting what? The Asian high buy side liquidity. Is this clear? I hope it is very clear. It's not as complex as you think. So you could simply just extend this line like this so that it can guide you. Okay, like this. You see how this Asian low sell side liquidity was rated? You can use red here. This is the manipulation here. Okay, this is the manipulation. Okay, so you see, that's what we are talking about here. We have accumulation during Asia. We have manipulation here during London, and then we have distribution. This is very, very simple, traders. And then you can just buy below Asia. Usually we buy below Asia and we sell above Asia, so you can just target this high as your profit. That is all. This could be your trade for the day and you are good to go. How many pips is that? 17 pips. That's okay. You don't need too much. That's okay. I hope it is clear. Now let us look at what happened the previous day. Let's go back to Asia. This is a very powerful trading strategy. Okay, this was the previous day. Let's look at what happened. Now we are going to do the same thing. We are going to mark let's look for the Asian session for that day. It started at what? At 1900. We put our vertical line, and then it ended at what? At midnight 00 hours, right? Let's put our vertical line again. Oh yeah, this is 00 here, 00 here. Okay, and then what are we going to do? We are going to mark these highs here. Let me just do something here. We are going to mark these highs. Let's mark these highs. This is the Asian high, buy side liquidity, and then we are going to mark the low as well, the Asian low, sell side liquidity. Okay, and then we are going to put our midnight opening price, the first candle that opened here or the last candle that traded during Asia. We are going to extend it across right to midday. Okay, and we are going to label it, sorry about that, we are going to label it the midnight opening price. Okay, we are going to label it the New York midnight open, which is 12:00. Okay, and we are going to put it what, the middle and then right, like this. Okay, I hope it is clear. Then this one we are going to label it what? Asian low, sell side liquidity. We'll put it at the bottom and then center. This is perfect. We are going to do this also Asian high, buy side liquidity. We are going to put it top and centered. I hope it is clear. Now if you like, again, this is up to you. It's not mandatory. You can still color it so that it will guide you. Okay, this is your Asian range from 7 p.m. to midnight. Okay, now what are we going to do again? We are going to wait. Where has liquidity been taken? The first thing that happened is that liquidity was taken above the Asian high. Okay, so this is the manipulation here. This could be your trade for the day, just this one here. See, price traded above the Asian high and took out liquidity. I hope you see this. Now what did it do? It shifted structure. Look at something here on a lower time frame. This is 3 minutes. Okay, so you have to look for entry on a lower time frame. See, when it took out liquidity, Asian high buy side liquidity, it, see, this is a shift in market structure when this low was taken. And what happened here? A fair value gap was formed here, so price retraced into that fair value gap and then sold off, attacking the Asian low, sell side liquidity. Look at something. So this could be a trade here. Okay, this could be a trade and you are done for the day. Let's look at something and you are done for the day. You could sell this and you target this Asian low, sell side liquidity. How many pips is that? 15 pips, and you are good to go for the day. I hope you see how this strategy works. Right now, let us say you did not trade this one. You waited for the market to take out the Asian low, buy side and sell side liquidity. See, just this small move here is very significant in smart money concept. This small move here, this low was taken. Okay, now what are you going to do? You waited for a shift in market structure here. It did not happen. What did I say? I also said you can buy at what? At the midnight open. This is where the shift in market structure actually occurred, over here. Okay, and then what happened? Price created a imbalance here. This is a breaker block here. This is the last candle that was traded to. Okay, and then price retraced to that breaker block and it bought, attacking the Asian high buy side liquidity. So you could still buy here and you target what? You target these highs over here as your profit target over here also. How many pips is that? Let me check. This one is 13 pips, that's not bad. That's not bad for the year. Okay, and then notice something. Notice how price stayed above this this opening price for the day. See, price never went below this opening price, so you could still buy at this opening price and you will see the market go higher, right? So this midnight opening price is also used as a resistance or a support. Okay, I hope it is clear. This is a very simple strategy. You can use it to make a lot of money in smart money concept or in forex in general. Let's look at the last example. The last day or the previous day, this was a sell day. Okay, and we said if you are selling, you have to sell above Asia, and if you are buying, you have to buy below Asia. Let's look at 1900, the start of the Asian session, and let's look at when it closed. This was midnight in New York. Okay, 00 where is 00 00 oh my god, this is crazy. I'm going to put it to 00, not 003, exactly 00. Okay, good, you have to do this. Okay, so let's mark our range again. This is the range that was formed during Asia, the high that was formed during Asia, the Asian high, and this is the low that was formed during Asia. It actually happened here. Good, this is the low that was formed inside Asia. Okay, so you are going to name it. Please, you do that. I'm not going to do it again. This is the Asian high buy side liquidity. You are going to name it, and this is the Asian low sell side liquidity. So you are going to color it if you want. Okay, always do this so that it can guide you. You can serve as a gauge. Okay, now the next thing you are going to do is you are going to look at the last candle that was traded during Asia and the first candle that was traded during midnight open. We are going to draw our horizontal line across, and we will label this line the New York midnight open. Okay, midnight open 1200. Okay, and we'll put it to the you can still put it to the top and then to the right. Okay, it's still okay like this. Okay, there's no problem with this. You extend it till midday. All right, now look at something. If you notice, the market didn't come up to take liquidity above Asia. It didn't come. Okay, but it took liquidity below Asia, so you could still be a buyer here. The moment it traded below here, you could still buy here. Okay, but it didn't come above here. Sometimes it will happen. There's no nothing wrong with that. But look at something. The market actually traded above the midnight open here. Okay, and then displaced lower, created an imbalance. This is a order block here, so you could still sell here. Okay, you could still sell here. There's no problem. Or even if you didn't have a trade that day, it's totally fine. It's totally fine. You don't have to trade every day. Okay, you could still trade here and target your profit below. Or this another one. Look at something. What do we have here? We have a trade here. See, the moment price took out liquidity below this Asia, you could still buy below here. Okay, let us say you bought below this Asia. Let's see how many pips you can have there. I'm sorry this video is long, but it's very powerful video. How many pips is this? This is 23 pips. That's not small. That's not small, traders. Okay, and then if you miss that, there's no problem. Look, this is another opportunity. We are buying below Asia. See, we have a shift in market structure here, right? This is a shift in market structure here, and then the market created a fair value gap here and traded back into that fair value gap. We are buying. This is a break of structure. The market traded back into this order block here. We can buy here. This is another break of structure. We can buy into this fair value gap. You see, so this is a lot of opportunities, traders. If you can understand this strategy, trust me, you will do a lot. Now see, this is a shift in market structure here, a bearish shift in market structure. Price displaced lower and then traded back into what? Into this breaker block here. Okay, you could be selling here and targeting even 10 to 15 pips. That will still be fine. There's no problem, and you take your profit down here and you leave. It continues like this and it never stops. Okay, let us look at the other day. I just want to show you a few examples so that you can test this. Where is 1900? Okay, this 1900. Let's look at midnight. This is midnight. midnight. It's difficult for us to mark it, but we'll wait it, no problem. This is midnight. Okay, I got it right. Now what are we going to do again? We are going to mark the high and the low of Asia. Okay, this is the Asian high buy side liquidity. Please label it. Okay, label it, always label it. For the sake of time I will not do it, but please label it. This is the Asian low sell side liquidity. Okay, label it. Now we are going to mark our midnight open, the last candle that was traded here. We are going to extend it across till midday. Okay, now we want to buy below the midnight open also, and we want to sell above the midnight open. We want to buy at the midnight open as well. You can either buy below or at the midnight open. You can sell above or at the midnight open. Okay, now look at something. Let's say this did not really give you what you want, but there is no problem. You can still buy here. Okay, the moment price traded below this midnight open, you can look for an imbalance here. Sometimes you will not run these lows, that is okay. You can still buy at this price here. At this price you will still be right. Okay, now let's see something. Did IPTA trade take liquidity above Asia? Yes, this is a run on buy side liquidity here. All of this here, this manipulation here is a run on buy side liquidity. Did we see a trade to sell into here? It's quite nasty. Sometimes you will not see the trade. That's very true. Okay, but if you bought here, if you bought at the opening price, the midnight opening price, you could still have a very good trade for that day. Okay, you could have a very good trade, and you target the Asian high buy side liquidity. I hope you are getting the point. This is the last example I am going to do, and we'll close this. Okay, the video is already long, 26 minutes. That's too much. Okay, this one we are going to look at the 1900 1900, excuse me, 1900. Oh, it's difficult to do this, but you have to get to it, please. Oh, 1903. Please put it at 1900. Okay, not 1903. We have to be accurate here. 1900. Midnight. That's midnight. Okay, so we are going to again take the high and the low of Asia like this, the high and the low, okay, of Asia, and we are going to label it at Asian high buy side liquidity and Asian low sell side liquidity. This is the range here. Okay, now did IPTA take liquidity below Asia? Yes, look at it here. These stops were run. Now what happened? We saw a shift in market structure, right? This is a shift in market structure right here, and the price traded into this breaker block here. There's a breaker block here, brothers. There's a breaker block here, traders, sorry. So you could buy here. Okay, you could buy here, and you target the opposing liquidity. I hope it is clear. Now liquidity resides above Asia and liquidity resides below Asia. So what is the goal? Buy below Asia and sell above Asia. Okay, I forgot to put the midnight open. Okay, but we are going to put it here. So you have to put your midnight open. This is the first candle that traded here. Extend it across, boom, extend like this, and you label it. Okay, always label it. Always, don't forget to do that. Always label it. See, you could be buying at, okay, you could be buying at this midnight open price or below the midnight open price. How many pips is this? 30 pips, and you are good for the day. So if you can be trading only this strategy, trust me, you are going to make a lot of money in forex. All of these things you see here is a run on Asian high buy side liquidity. All of this trade here, all of this one here is the manipulation. All of this one here, okay, all of this one is manipulation. So we want to see some form of accumulation during Asia, manipulation, and then distribution if you are selling. Okay, so this is the manipulation here. You wait for a shift in market structure, you look for an imbalance, and then you sell. It will distribute. I hope it is clear. So you can go ahead and practice this, and you will see a lot of changes in your trading. Trust me, a lot of changes. So the manipulation occurs during New York session, and then we have the distribution during the accumulation occurs during Asia, the manipulation during London, and then the distribution will occur during the New York session. Okay, I hope it is clear. So you could still sell here and you will make a lot of money. Okay, so you can see something here: accumulation during Asia, accumulation, manipulation during London, and then what? Distribution during New York. This is the distribution here is sold off, and you are good to go for the day. Okay, thank you so much. This video is very long, but this is very important. This is going to change your life. Okay, if you don't understand, make sure you watch over and over again, and I trust me, a lot is going to happen in your trading life. Accumulation, manipulation here, distribution. Accumulation, manipulation here, distribution. You can also call this the manipulation phase. Okay, and then distribution lower. Accumulation, manipulation, distribution up. Okay, accumulation, manipulation, distribution. I hope you see it. That is the ICT power of 3. Thank you so much for watching, and talk to you soon again. Goodbye.